it comes to trading breakouts. Nothing else is going to matter. And so let's start breaking this down. Let's start understanding, right? So I posted this around 10 a.m. Eastern. So we want to understand our first key level down here. So this blue box is the same as the key level. So this first blue box is this region over here. So let's break down the theory of this, right? Let's break down the theory. So we have the first 15 minutes, and I'm looking to see a reaction from either this level or this level. Now, typically I never trade the first 5 minutes. So from 9:30 to 9:35, this is what I call this is like the alarm bell, basically. This is like the opening bell. This is not when the market's fully awake. This is like when the market's stretching, right? We can see a big move up and then a big move down. Let the first 5 minutes consolidate, do its thing. But once you understand that, you want to start reading price action inside of these levels. Again, these levels are very important: 2, 3, and then eventually 4. But as you can see in this case, market opens between 2 and 3. So we're only interested in 2 to 3 levels per day. You're only interested in 2 to 3, and then 3 maybe up to 4. So let's kind of break this down. So in real time, you want to understand how the market was reacting. So we can see here, market breaks above our level, or we managed to get above this level. But what was going on? So this is now 9:40 to around 9:45, maybe to about 10 a.m. Eastern. So this sort of rejection over here. So this is again a key level 2, right? Key level 2. What was happening inside of key level 2, right? What can we take away from key level 2? So if we just take a look at key level 2 now, we can see here the same screenshot from the ATAS platform. The prices were 68.20 to 30, 68.20 to 30 on ES futures. So this is now 68.20 to 30. So what we can see is as the market comes into this zone, especially these sort of candles here. So we had this big wick candle down here, this one, 9:45 exactly, right? What's this, right? What is going on here? So when we understand footprint charts in terms of how they actually behave, this is what we see, right? Footprint charts come down to two numbers. You have the bid and you have the ask, right? You have the bid and the ask. Now, what does the bid represent? These are aggressive sellers, right? And what does the ask represent? Well, these are aggressive buyers. So once you understand who is aggressive, the aggressive buyers and the aggressive sellers, you can then start to understand what a footprint chart represents, because a footprint chart tells you who is more aggressive, right? So all this is telling you is who is more aggressive, right? Is it the aggressive? Is it the sellers? Is it the buyers inside of this key level? So notice how we've started with a key level. We waited for the market to enter the key level, and now we're looking at order flow. So this is step 3. So you want to understand what was going on inside of this key level. So what we can see here is a lot of red delta, right? We can see a lot of red delta. And so delta, for those who don't know what that is, red delta just means that there's more aggressive buyers and sellers. So the aggressive sellers, more aggressive sellers than buyers. So there's more aggressive sellers than aggressive buyers. This is the fundamentals to order flow. So once you understand that, there's more aggressive sellers than buyers. What we begin to see here is moves up, right? Moves up here, moves up here. So when you look at this, right, we see red delta, we see more aggressive sellers than aggressive buyers. Now, the next thing to understand is if we break higher, what does this mean? What does this mean to us? So between 9:45 to around, let's call it 10 a.m. Eastern, or just before 10 a.m. Eastern, what do these aggressive sellers tell us, right? Basically, in other words, were they successful? Were